Hello guys, welcome back to my channel. In today's video, I will give a detailed breakdown of trade that I captured on Friday in USDJPY. So this was the before picture of DXY. I was expecting a down move. So from this order block to this support zone, uh, as we know that DXY is directly like has positive correlation with USDJPY, so we would expect a same move on USDJPY to the downside. So this was the DXY for our chart. This was our 50% first target, and this was our CRT low second target. So this is the before, sorry, after picture. CRT high 50% achieve, and then later on we also achieved the CRT low target. And this was my entry on USDJPY, and this was the entry exit. So now let's look at the USDJPY. This was the daily time frame. First of all, when I open a chart on Friday, I noticed this SMT. Price created this SMT with DXY. This was the Friday 1st August swing. Price take out this swing, and but on DXY price failed to take out this swing. This was the 1st August swing, and price failed to take out this swing and give a strong rejection uh, from this order block, which I pointed attention to. This was the order block. So price created this strong pullback, give a strong pullback from this order block. This was the same scenario as price created few days ago on GBPUSD, because price created this SMT with Euro USD. Price failed to take out this high, and this was the extreme order block. Price gave a strong rejection from this order block. But if you look at Euro USD take out this high. So this was the same scenario on USD JPY and DXY. That's why I was expecting a down move, and as you can see on GBPUSD, after that SMT, price created this strong move to the downside, which was more than 450 pips. So this was the same scenario on USDJPY. So this was the first confirmation, and the second confirmation was that price was reacting at a strong supply zone, because this lead to a breakout structure. This order block lead to a breakout structure of this swing. So we could expect a down move from this from this order block, because this lead to a breakout structure. And on USDJPY, price was reacting a strong supply zone. This was the strong supply zone. This was the order block, which lead to a breakout structure. So we could expect a down move from this order block, and price was reacting a mean threshold. Price was reacting at a mean threshold, almost at a 50% of this order block. So that's why I was expecting a down move from this to the downside from this order block. And now let's look at the DXY for our chart. And another confirmation was that if you know the candle range theory, or open low high close, which is OLHC, open high low close. Whenever most of the time price open, whenever you expect a bullish move, the price give a open like Monday. This is open price, sorry, this is open price, and then price tap the PY on lower time frame like 4 hour or 3 hour. So and then if you are bullish scenario, then we could expect a bullish move, and then close on the last day of the week. This is same for weekly, monthly and daily. So price was bullish on Monday, Tuesday, Wednesday and Thursday. This was Monday, price was bullish. Tuesday, Wednesday, Thursday, and then I was expecting a down move on Friday because of this concept. So this was another confirmation of open, low, high, and close. So this was second confirmation. Now let's look at the 4-hour time frame. And another confirmation was CRT high and CRT low. If you have ever studied the CRT candle range theory, uh, basically candle range CRT trader believe that every candle is a range and there is liquidity above candle high and candle low. So whenever price break through this with a body candle close, we could expect a bullish move. But if price fail to break this above this high and sweep the liquidity like this in this scenario, and then we can target the low of this candle. So this become our range. Price sweep the range high, and then we can expect a move to the downside to the range low. This must be at the key level like FEG, order block, and mitigation block, breaker block. So this must be at the key demand or supply zone. So in this scenario we have a key level which is daily order block from daily time frame. So this was a key level, and price created this 4-hour range at key level. Price created first this range at key level and then sweep the range high. Body candle closes inside the wick, so we could expect a down move. This become our first target 50%, and this is our second target, which is CRT low, and price also achieve this CRT low. So this was our second confirmation. Now I just need to enter on a lower time frame to find my entry on lower time frame. So I jump into the 1-hour chart. Sorry, on because my entry was on USDJPY. I just use DXY for confirmation, and then I place my order at USDJPY. So this was my entry. Price created the same situation on almost same situation or scenario on 4-hour chart on USDJPY. Price created this rejection zone. Price was failed to break the high. So price created this rejection zone. 1, 2, 3, 4, 5, 6 rejection candle. So this was high confirmation, and the last candle sweep everything, and then candle body closes below the body. So this was the high confirmation. But again I waited for more confirmation. I waited for IFEG or FEG to be created. So price first created this FEG and then violated this FEG, give us a inversion fair value gap. So this become your IFEG. So this is your another confirmation that now price is likely to move to the downside, and this was my target because this is the first low, and we have another low which is this one. So that's why I set my target at this low. Now let's look at the 1-hour chart. So this was IFEG from 4-hour time frame. I refined this in the 1-hour time frame. So my first order was at this order block from 1 hour. This was my first entry. My SL was above this and my entry was at the body of this, but price failed to execute my order and didn't execute my order and released to the downside. So then I jump into the 15-minute to find my another entry because my buyers were clear to the downside. So I waited for a price tap into this order block. At that time I didn't notice this order block in the 15-minute because this order block which was from 1 hour order block was already tapped. If you look at the 1 hour, in 1 hour it was not mitigated, but in 15-minute this order block was already mitigated. So this was 1 hour order block and this was already mitigated. So this was not making any sense to place my order over here, but I didn't notice at that time because most of the thing you will not notice in the live market. So that's why I placed my order above at this 1 hour order block, and price didn't executed my order block. So I missed entry from this zone, but when price created this breakout structure, price went to the upside and then released to the downside, created this breakout structure. So I placed my order again at this order block, and my SL was above this order block. So this was my second entry, and then price released to the upside, activated my order, sweep this high. I placed my order SL above this order block because I was expecting a sweep of this swing. So this was price sweep this liquidity and then release to the downside, and this was my target, which was of almost 1:5 risk to reward ratio. So let me explain it again to you. I hope you would understand this. So price created first SMT on daily time frame. Price was reacting at a supply zone. This is our first confirmation, this is our second confirmation, and on 4 hour price created this CRT, which is candle range theory concept, and this become our first target, which is 50%, and then this is our second target. So on the USDJPY I waited for a confirmation on 4 hour because without FEG or IFEG I don't enter into a trade. So I waited for CISD and IFEG or FEG. So here price didn't created any FEG or IFEG on 4 hour. That's why I waited for price to create FEG here or IFEG, which is the violation of bullish FEG. So price created this FEG and then violate this FEG, which become our inversion. So this is your entry point, first entry point. But on then I jump into the lower time frame to reduces my like SL, and then I found this order block. So I placed my first order over here, but price didn't executed my order, and because this zone was already mitigated on 30-minute and 15-minute. If you look at in the 30-minute, this was the order block, price released to the downside, mitigated this order block. So this was already mitigated, so price didn't execute my order, that's why. So I missed entry from this zone, but then on the lower time frame when price tap into this order block, dump to the downside, release to the downside, created a breakout structure. So this become our valid order block for the entry. So I places my order over here and my SL over this order block because I was expecting a sweep of this liquidity, which is inducement liquidity, and then price release to the downside. This was my target. So this was the trade that I captured on Friday. I hope you would like this video. So if you like the video, please subscribe to my channel. See you in the next one.